what else is looking good? There's Divi's, of course, after its earnings and the kind of commentary that came out in the con call. That stock is sitting at the day's highs. It's spiked up almost about 2% right now. In fact, Deepak, Pharma has made quite the interesting comeback, right? Anything that you're spotting or scouting?
Yeah, that's a good point. We've been actually, I haven't seen too much of Divi's result, but I think after this, we'll have to just do a quick look at all pharma results in general. I think the stock prices have done a fair bit better, including even the likes of Sun comparison. Sun Pharma has been a mover which has not moved for a really long time. So we find, I mean, I haven't done a whole lot of analysis here on the results because we think it's been we thought it'll be a washout year for most of pharma. But this quarter seems to be more interesting from the earnings perspective and from commentary perspective. I'm sorry, I don't have much more specifics, but we are looking at stocks here to add to our portfolio. But they're still early, probably only next month before we do something concrete on it. We haven't been in pharma for at least I think a few months now.
That's the take on pharma. In fact,
talk a bit macros with you, Deepak, as well. Today, of course, there's big moves happening in the money market as well. Do you think this China, whatever we are hearing in terms of the next bout of bankruptcies that are coming in the property sector, real estate sector, could that become another contagion at all? Have you been following the news flow?
I think honestly, China seems to have been in the brink of property bankruptcies for the last 4 years now. So for some reason or the other, they are overstretched. They've been overstretched in 2017 or 18, and it's been 5 years, and they've managed to protect the sector from at least the massive news of bankruptcies. We've had Evergrande, we've had a bunch of others that actually came out, but none of the other news is actually panning out in any meaningful way. I also think the Chinese consumer is very, very sensitive about real estate, and there will be a lot of demand if the prices were to crash tremendously. And much of that news doesn't come out of China. So I think I take a news of large-scale bankruptcies with a pinch of salt, but I do think one or two players will go down. It's just natural in a cycle where there's a lot of leverage that they will. But to be fair, the interest rates in China are not so meaningfully high that it distresses homeowners. It may only be a demand issue. There has always been oversupply in China. So I think, a demand issue could bring down prices and cause an effect. Versus in America, where actually interest rates are very, very high right now. And they are probably also sitting on the brink of something happening in the real estate sector, which is probably equally worrying. So I'd actually worry more about American real estate giving a signal to global markets than China.
Okay, so that's a take coming in. But in the market, well, it is a lot of these result reactions, to be honest. Garden Reach, and then even Mazgaon Dock and Cochin Shipyard is firing away. Amber Enterprises is doing okay in the trading session. On the losing side, it is Nykaa, it is City Union Bank, it's Fenelix Cables, there's also Jindal Steel and Timken India, Muthoot Finance. So the list is really long there as well. Incrementally speaking, Deepak, which are the areas of interest? Because whatever is the consensus buy in terms of, let's say, the banking sector or the manufacturing names or defense teams, these seem to have run up quite a bit. Any new areas that you are identifying for yourself?
So I think, I honestly think there'll be a lot more demand for both railways and defense orders that are coming in. And I think while these stocks have run up quite a bit, there is actually a significant room for growth from here, even though the prices have run up. I also think some of the domestic consumption stories and high precision engineering stories will make a difference, because if you start manufacturing for India, a lot of the things that you need from an angle of setting up a manufacturing unit will require high precision engineering equipment, consumables, and so on. So some of those areas are actually doing quite well, whether it is, and you're hearing commentary even from the Schaefflers of the world about how India is generally becoming a higher demand center for a lot of goods. So I think that is one area where we are seeing some interest. We have some stocks over there, but there's also so I think this and green energy or the electric vehicle revolution. I think that's a common theme, and it played out, and it was much more in demand last maybe 2 years ago than it is now. But you're seeing a lot of those stocks still doing well, and I think that demand, especially on the CV front, buses and perhaps mini trucks or city-wide logistics. I think that is going to continue to be a strong theme going forward. But this is more fundamental based in the sense that I think the story will play out over the next 3 to 4 years, not immediately. So still interested in those names.
Deepak, what's your view of Nykaa versus Zomato?
So honestly, different segments, I guess, but Zomato's at least the core business seems to be in better shape. Now, interestingly, they've got 11,000 crores of cash. They're able to fund Blinkit's losses primarily from the interest they seem to be making on that 11,000 crores of cash. So in a way, that cash balance hasn't dwindled, and they've been able to fund what is effectively a deep loss-making operation with Blinkit, while continuing to have some kind of cash flow positivity on the core delivery business. This is a good sign, but we'll have to see how long it lasts, because if you stop spending money on advertising and promotions, you'll get a good quarter. But then will it sustain over a couple of or more quarters, especially when you have strong competition? Your other competitor, Swiggy, is unlisted, does not have the public face to show. Therefore, will you be able to sustain? That's the question you'd have to ask. In Nykaa's case, the competition is much more entrenched. There's a lot more brands coming from Amazon to Jio. There's a lot more from the in the branded territory, competition that's coming in. I think there the financials are a little bit weaker, although they have a real profit on the books compared to Zomato. I think, and I'd be more watchful to see how Zomato grows up from here, because I think Nykaa's, the metrics don't seem to have quite as much an attraction if you ask me to compare just the two of them. But again, I'll wait a couple of quarters to see how this sustains. Nykaa's numbers haven't been impressive. Zomato's growth has been, I think.
Sure. So it's Zomato versus Nykaa, clearly, if you had to make a choice. But let's get in some BTST trades as well.